In this video, traders, we're going to look at, are you afraid to trade? Let's look at some of the symptoms, some of the causes, and why it can be so damaging for traders. Stay tuned. Hey guys, warm welcome to you. All right, so in this video, I'm going to look at what is afraid to trade. Let's look at some of the symptoms that you may well have that signify you potentially are afraid to trade. So what does it mean? So afraid to trade generally means that you're not taking the risk that you should do as a trader. It's a fine line, right? As traders, you know, we have to protect capital, but also to make money, we have to actually be prepared to take risk as well. Too much risk and we end up losing more money and going to trades we shouldn't do. Too little risk and we end up just grinding away money and losing little bits and won't even make anything. So I think that most traders at some point in their career go through this phase at some time or another, because we may well be in a protective mode, we may well be in a nervous mode, we may well be, and it depends. Sometimes people get this after a drawdown, some people get this after a big ramp up. So you've had a couple of good months or a good quarter, you might be like, oh, I know I need to just be cautious. And listen, there, just as we said earlier, there is a fine line between doing the best things in your interests and just really going the other way. So some of the things that you might be doing that are warning signs that potentially need to kind of take a look at this is closing a trade too early. So closing trade too early, that isn't necessarily an operational thing, i.e., hey, I'm closing it just because it's hit my level. It's if you're doing it all the time because you're fearful of giving back profits. Now, yes, there are circumstances where you want to not give back profits, but if the market's just moved 10, 15 ticks in your favor and you were looking for 50, 60, you got a 50, 60 point stop, you probably still have to let that potentially go against you to mature into the trade that you want. So snatching a trade just because they're going your favor slightly can indicate that you're too afraid to trade. Another one is stops too tight. So, you know, very many people, or very many traders, should I say, think that if I have a tight stop, that limits the risk. And I've been through a phase where I've done this before, guys, where I've wanted to protect capital so much and not wanted to give back great gains that I've tried to adjust my trading and have a tighter stop and do this, and it never works out. What actually happens is you end up losing more and you end up, you know, missing out on the big winning trades because your stops are too tight. So this comes really from a kind of deep-rooted sense of, hey, I don't want to lose money. I don't want to risk the full money. And rather than reducing the size and increasing the stop or keeping the stop as it was, if you've got a profitable strategy, you go, okay, well, I'll just tighten the stop up. You know, this is a good one to tighten the stop up. And it very, very rarely works. So if your stops are too tight, you've got to ask the question, why? Generally is because you don't want to lose money. Well, if you don't want to lose money, then you need to adjust what you're doing, and that generally is better off to reduce your position size rather than try to adjust the strategy too much. Okay, so not trading when setups are forming. Pretty obvious one, this. If you've got rules and setups, and this is where a trading plan comes in, is very useful. If you've got a setup occurring, great setup, and for whatever reason you're justifying not pulling the trigger on it, again, that might be because you're too afraid to trade. It might be because you're nervous of the risk and you're not accepting the risk. Too quick to quit. What I mean by this, so I don't mean quitting trading completely. I mean that if you are, let's say, a day trader, you've had a great morning and you're calling it a day, rather than saying, hey, listen, I'm trading well, the market conditions are ripe, why would I stop that? Let me keep pressing. By all means, protect some of the gains. So say, hey, if I draw down by X, then I'm going to stop for the day. But why not leverage on that success and trade more? And very often, you know, some traders go, I'm going to call it a day, I'm not going to trade anymore. Now that's fine if it's operational and the market's changed condition. But if it's working for you, why quit? Why not press the throttle more and be prepared to give back some money for the potential of making 3 times as much? The other one is if you're nervous about giving profits back. So similar to the stop, but this is just generally on a trade. You know, a trade's going your way and you're thinking and feeling more about how you'd feel and how disappointed you'd be if you gave back those profits. So you can look at it from a trade basis, you can look at it from a day basis, a quarter basis, whatever. It's not wanting to give back the profits, but as we know, we have to be prepared to push some risk onto the table to make more. And so the trouble we have, if we look at all these some of these symptoms, some of these warning signs here, if you have some of these, now a few aren't too bad, they're reasonably healthy. Listen, we all have some feeling that, hey, we don't want to risk too much, don't want to give too much back and this. But the kind of way to get around this is to take that healthy fear of catastrophic loss, which is good, we don't want to be catastrophic drawing down here, but saying, hey, listen, you know what? This is right, this is my strategy, this is my setup, this is what I'm doing, this is my risk parameters, this is my plan. This is now part of the game. I have to be prepared to risk this. If you're not happy with it for whatever reason, then maybe dial down the size a little bit and say, am I happy to risk this? Okay, and soon you get back into the swing of it. So be careful of this, guys, because this is really a road to ruin. If you're constantly fearful of risk, you'll do these things, you'll have your stops too tight, you'll be snatching at profits, and whilst that isn't a problem on a handful of trades, over time that reduces the expectancy and makes it a negative expectancy because you're not running the trades to fruition, you're getting stopped far quicker on noise, you're not taking the very best trades, you're not pulling the trigger on it, you're quitting when you find an edge and it's working, and all these things are just stifling growth. So of course, when you do have the bigger losers, then they're going to outweigh those winners and your account equity curve is going to fall to the downside. It's a fine line, appreciate it. You don't want to go gun-ho with the risk and go crazy, but at the same time, be mindful that that can creep up, and it will creep up for traders, maybe several times in their career, and you've got to find out, really dig down as to why that is, but get back on the horse, trade again, but just do it small, and then increase your risk until you've kind of got rid of it and you're back in the zone again. All right, guys, take care. Bye-bye.